Here we're looking at the Dow, and you can see we got a nice little snapback after a pretty good decline here. We hit the low of 1664, 674, and we saw the bounce off that coming back into the 16800. We've talked about that being a pretty good support range. This is where it stopped prior to that on the prior day, and we saw it trying to come back into the 100-day moving average right near this 16900. That is a very important range. I think if we get the break over that range and over 17,000, then we'll see the another generating move toward toward the 17,350 level, maybe 17,400 or 500 area. But I really think we're still seeing some significant divergence that's been building up in here. And as this rally tries to snap back, we have to see the commitment of this. It's still under these moving averages, so we really have to consider the fact that we could still be in a very negative overall market movement. And with the jobs number, you don't want to be too brave jumping in between that, picking one direction or another here. We were seeing a pretty nice little rebound today after a pretty overextended market. I mean, it's dropped significantly over the course of the several days, so it makes sense that it's bouncing back here. But we really didn't see any for the bulls, didn't see any break over these important moving averages. So nothing has really changed here just yet. So unless you really see that, you don't want to get too aggressive to the upside. You got to understand this could be just a little bit of a counter move to the trend to the downside. And the down move has kind of stopped a little bit here. So you really be, if you're trying to look for positions, you want to give this rally, or if it's going to fail this type of rally, you want to try to short into that position as you start to see it weaken, maybe around this 17,000 to 16,900 range.